the concept of holding debt as an asset, I don't think is something that has a massive historical footprint. But when you overlever the debt the way that we have, and this debt that's very interest rate sensitive, and then rates start to go higher and the economy starts to slow, the maintaining of debt becomes very big deal. And if the debt isn't able to be serviced, and this is the whole concept of credit default swaps, where if you're trading with another partner who you don't quite trust, you take out an insurance policy against them and their ability to pay. And the insurance company's like, well, that's big money. Let's do it. And then boom, it blows up. And then real quick, the whole thing starts to spin out of control. So, it's a problem. It's a problem that has to be dealt with. And this debt problem, it can't really be paid back. So the ironic thing about it is that most of it is owed to the American people, Medicare, Medicaid, Social Security, the government military pensions. And so much of the money that's gone into treasuries has, as the foreigners have been selling them, we've been buying them chasing yield. So if you really want to get into the weeds and talk about resetting the system, we're resetting predominantly upon the American people. Only about 7 trillion is owed. That's a lot to the rest of the world, but to the American people, it's the majority. And what I was looking for earlier, by the way, this is a Bank of America survey showed that 71% of financial advisors had a 0 to 1% allocation to gold. This was at the end of 2023. While only 27% had a 1 to 5% exposure, shockingly, just 2% of advisors reported a 5 to 10% allocation. And, this is why, we're nowhere near the top in this bull market, as the American participation in the face of, positive real yields, if you believe the BLS and the BLS and the CPI, positive real yield, strong dollar, no American participation, nothing in terms of institutional money, and it still goes higher. And that's because of the central banks. They're the most well-informed traders in the world, and Wall Street will catch on. We're beginning to see it. Paul Tudor Jones making comments, big comments about it. And what's his name? The other guy that was Druckenmiller talking about it. Tudor Jones says all roads lead to inflation. I'm long gold. I'm long Bitcoin. And Druckenmiller, something to the extent of, you don't know gold, you don't know economics. You're beginning to see the big money talk about it. There's a long way to go in the gold market too, but it's very interesting when we look at the 10-year yield, which rose to 4.25% the other day, which is up 60 basis points from the day that the Fed rate cut, went down by 50 basis points. So it's a big deal to see the 10-year moving the other direction. All of this stuff is the bond market and gold's way of saying that you're trapped and you're going to have to jack up the rates on the back end for us to want to invest in it, which only puts greater strain on the economy. That's why we're trapped. It's I don't know what the right answer is. Then again, either you just let it all blow up or you paper it over until it blows up. It's a sad statement, but I don't know what the final outcome is or how you get out of this without massive production, increasing your GDP. And we're a long ways away from that. We'd have to onshore all of our manufacturing, train everyone how to do it, and become efficient in it. And that's going to take some time. So any way you look at it, there's some pain that we're going to have to go through in order to get through to the other side. Well, you can take that up with the IRS, unfortunately. Their Representative Mooney has talked about removing tax on precious metals when you sell it. And I don't know if he's talking only about American coins. He might be, the legal tender coins. But yeah, it sucks. But it's better than losing. But yeah, there's no way around that, unfortunately. And while it makes great sense, and this is why some of the states have stopped charging state capital gains tax or state tax when you sell precious metals because they realize that. So maybe it migrates to the federal level, I hope, but until it does, there's not a lot you can do about it. And it is the 28% collectible rate, which, by the way, even if you're in GLD and SLV, the paper derivative ETF, where you can never take possession, it's the same tax rate, believe it or not. What happened is right out of a James Bond movie, as far as I'm concerned. It's like espionage. And I say that kind of tongue in cheek, but kind of not tongue in cheek. And yeah, okay, look, there were some things that came out of it. They wanted to show cooperation. They made a big deal about Moody and Xi meeting on the sideline, or Xi Jinping meeting on the sideline, and coming to an agreement on patrolling of the border and resolution and unity and peace and, you know, kumbaya. The same thing with Iran and Saudi Arabia, Sunni Shiite, who last year China brokered a peace deal. They had talked about building embassies. They've hated each other forever, and now they're going to do joint naval drills together. They wanted to show that they have their act together. They talked a lot about they wanted a new Bretton Woods system, but they talked about integration into the Western system, which was kind of shocking. The WHO, the IMF, the BIS, all of these things, they're showing, they really wanted to show the world that it was about cooperation and not about coercion, and that they were finding peace and strength through unity. They talked about BRICS Clear, which I'll talk about in a brief way, which is basically a platform that will allow countries to trade with one another. The commercial banks have this ledger, BRICS Clear, and every month or every quarter, it won't be instantly, they'll settle out the net differences, not the gross. So you don't have to keep converting currencies and go back and forth. The banks will keep track on the ledger, which is free from SWIFT system interruptions. The net settlement number. So if I end up owing you, the difference is, you know, 5,000 yuan, then that's what I'll get paid. And if at the end of the month or the quarter, I don't want the currency risk, the exchange rate risk, or I just have a balance of payment problem where I have too much of one currency, I'll buy gold. Now that's what James Rickards is saying. It's a de facto gold standard without the fixed peg, that they will take all of their excess after they trade with one another and balance out the net, not the gross, just the net, whatever is left over, and they'll put it in gold, and that will act as their stabilization, if you will. They talked about that. I'll talk in a minute about why they went down this way. They talked about BRICS Pay, which is B2B or consumer to the business. Any BRICS country you're in, it's an app or a credit card, and you don't have to exchange. You can just buy seamlessly with the BRICS Pay. So they're expanding not only their cooperation with the members, they are dealing with the ability to trade commodities and to trade things over BRICS Clear, securities, all sorts of things. And they're talking about BRICS Pay. Now, I want to bring something up that is really gross, and it probably only crystallizes 1,000,000% the way that these countries look at the West. So, you know, I did an interview with Michelle McCory from Kitco a couple weeks ago, and she said something to me that in the back of my mind, I always kind of saw it there and just glossed over it. And it always was kind of like blaring, and I would just go past it. And I should have thought about it more. And I said, you know, Michelle, there was a meeting in Novigrad that coincided with the G7 meeting, and the Saudis turned down the invitation to Italy to the G7, and they went to Novigrad, where Dilma Rousseff, the former president of Brazil, the head of the New Development Bank, said, yeah, we've agreed in principle to this new settlement currency, not unified currency, but a settlement currency called the unit. And it will be 40% gold backed and 60% basket of currencies, but it'll trade over Project Enbridge. So as I'm talking to Michelle about this, I say, you know, Project Enbridge was designed by China, Hong Kong, Thailand, and UAE, and backed by the Bank of International Settlements Innovation Hub. And Saudi Arabia just became the 5th full member on a platform where we've been told they're going to trade energy free from the SWIFT intervention or interruptions, and the dollar is not compatible with it. It's a big deal that Saudi Arabia signed up to it. And she said to me, well, Andy, isn't the BIS a Western institution? And I've always in my mind saw that ding, 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 ding. Like, yeah, maybe I really ought to pay attention to that. And I thought, well, maybe it was the way for the realization that these players, these very, very high up bankers would pull the strings on a common technology. That would be Project Cedar and Project Agora in the West versus Project Enbridge in the East. And they oversee all of it instead of a one world currency, a one world system. Maybe that's it, I thought. Well, let me tell you, for those who haven't heard, just how gross this really is, what happened. So, Enbridge has been operational now for almost a year. And they were ready to roll this out. And we may not have heard at this meeting. It wasn't on the agenda. Maybe it was or it wasn't. But what I'm about to tell you is probably why it wasn't. And I find it to be disgusting unless I'm missing something. You can tell me what you think, Dunnigan. But so you have a nincompoop from the State Department who comes out and says any alternative to this the other day. And this is because we had a meeting. And that meeting was just the other day in Washington. And it was the Bank of International Settlements and the International Monetary Fund and the World Bank met in Washington. And you have this guy from the State Department who comes out, and the hubris of this dude to say alternatives to the SWIFT system and the undermining of the dollar's role threaten global democracy. Well, that's something that I think is rather rich to say. Okay, so he says that. But then you have this guy named Augustus Carstens, and he looks like Augustus from Willy Wonka, only grown up. He doesn't look like someone you'd really want to hang out with. I'll put it to you that way. He just seems like a bad dude, and his term ends in June, so it's easy for him to say this coming up. He says we cannot directly support any project for well, let me just back up. He's at the BIS. He's the general manager of the BIS, who their innovation hub has for 3 or 4 years been designing this with China, Hong Kong, Thailand, and the UAE, and now Saudi Arabia. And he comes out and says, now, after it's ready to go at the 12th hour, we cannot directly support any project for the BRICS because we cannot operate with countries that are subject to sanctions. I just want to be very clear about that.